The broadcast is now starting. All attendees are in listen-only mode.
Welcome to the impact of COVID-19 on China's automotive industry and global supply chain webinar, the first in a series of 3 webinars to come. Today, we'll take a look at current impact on sales, product and overall market growth, impact on the global supply chain, and a longer view on new opportunities. To kick things off, I'd like to turn it over to Bill Hanvey, President and CEO of the Auto Care Association. Bill?
Thank you very much, Angela, and good morning to everybody. I hope all of you are safe and well, and I want to particularly welcome Bill Russo of Automobility, who has put together a very relevant, very topical presentation for all of us today. The situation that we're in currently has affected all of us. As Bill and I were talking before the call, it is a common denominator for the globe. And it's the way that you personally react, and it's the way that you react from a business perspective that's going to make each of us unique in terms of the way that we get through this. And you know, there are opportunities when situations present themselves, and we feel that there are opportunities for our market. But first, we need to be aware. We need to be educated. China is a very important trading partner with us, and Bill can give us some great insights in terms of what's happening there and the effects of the virus on the logistical supply chain. So again, I want to thank all of you for joining us. You know, this is a series of webinars that we've been conducting. If there's other information or educational webinars that you feel would be beneficial to our entire membership, we'd love to hear from you. Please contact Amanda Bishoping at autocare.org for any of your recommendations. Again, thank you. I'm going to turn it over back to Angela, who can give Bill his due credit for the introduction.
Thank you, Bill. Before I turn it over to today's presenter, I have a few housekeeping notes to share. For any questions, please use the Questions tab located on the bottom right-hand side of your GoToWebinar console. This webinar will be recorded, and the recording will be distributed 24 hours after the event has concluded so that you can listen on demand at your convenience. It'll also be available on the Auto Care Association's coronavirus resource page at autocare.org/coronavirus. And if you're sharing on social, please use the hashtag AutoCareLive, one word. Lastly, please don't forget to take our survey directly after the webinar so that we can use your feedback for future webinars and content related to helping your business navigate COVID-19. Today, you'll hear from Bill Russo, Shanghai-based founder and CEO of Automobility, a strategy and investment advisory firm helping its clients to create the future of mobility. His over 35 years of experience includes 15 years as an automotive executive and 16 years of experience in China and Asia. He has also worked nearly 12 years in the electronics and information technology industries. He has worked as an advisor and consultant for numerous multinational and local Chinese firms in the formulation and implementation of their global market and product strategy. Bill is also currently serving as the chair of the Automotive Committee at the American Chamber of Commerce in Shanghai. So I know we have a lot of content to get through, Bill. I'll turn it over to you now.
Well, thanks so much, both Bill and Angela, and thanks everyone for joining this evening for us, morning for you, or for wherever you're at in the world. As I was discussing, and as Bill alluded to, you know, this is one of the few times in our lives that we can all say we're going through all a shared experience of dealing with a pandemic. We may have heard of other outbreaks in the past, Ebola, SARS, MERS, or whatever we choose, whatever names they're given. But this is the first one that really has touched us all, and it's changed our lives in some fundamental ways. Some things may be short-term, others may be long. But what I'm going to share with you today is how we've weathered the storm here in China and what the implications are, both for the industry as well as for the supply chain, as well as looking at the future, is what might the outcome be in the various markets. The one thing that I think is different for all of us is that we're at different stages of this, and how we act now is going to determine the future for the markets that we're in and for the world. So let's get into the content of the presentation. But first, just a brief introduction of my firm. As Angela said, chairing the Automotive Committee at the American Chamber of Commerce here in Shanghai. My principal business is my company, Automobility. Automobility was founded 2.5 years ago, and our basic premise is that we see an industry that's being transformed by technology. As other industries that I've worked in the past have been transformed, such as the computer industry, and as we've witnessed in our lifetimes, connectivity and technology shifts such as electrification and autonomous driving are coming, and we're changing the basic premise or value proposition of the industry of the automobile. The automobile is the product, but the utility from that product is mobility, and mobility affects everything. And we're going to talk about that in the context of COVID-19 and how it's being reshaped, this industry, not only by technology, but by the events that surround this outbreak. We called ourselves Automobility because mobility is the product that we serve. The automobile is the platform by which that utility is provided. And we see a lot of technology enabling this transformation. Wireless internet, artificial intelligence, Internet of Things, all of these buzzwords are actually becoming very important as we think through the phase of development that we're seeing ourselves go through, especially now accelerated by the coronavirus. So we've structured today to be the first of 3 webinars. We're going to talk about the impact of COVID-19 on the industry and the supply chain today. We'll talk in the subsequent webinars about how the industry is being reshaped through the outcomes of what we're experiencing today. I'll allude to a little bit of that today, but I'll dive into it in a lot more detail in the next webinar, where we explore the opportunities that come from this period of disruption that we're going through. The third will be looking at the automotive landscape, the automotive and mobility landscape, and how it might restructure in the aftermath of COVID-19. So those are the 3 topics. The first one for today, we'll kind of end today with really questions for you to consider, and inputs that we'll receive from you will help to shape the second and third webinars that we'll do for you. So I'm going to cover 4 topics, and I'm going to draw it together at the end in a summary. So the 4 areas are going to be understanding how the outbreak is manifested in China, and this will not be about the industry. It's going to be about how China went through this process and how it's come through it. Then we'll talk about the impact on the automotive industry, because we're starting to see the green shoots of recovery now, but only because of the steps that were taken to contain the outbreak. The third part of this is looking at the supply chain, both in China as well as globally, and how it's being reshaped by the events that we've experienced. And then the fourth part is where we see the silver lining. What comes out of this is a new normal, and what will the value chain of this industry look like in that new normal period? Again, we're starting to see the beginning evidence of what that might be here in China. First, because the China market there's China context is quite special in terms of how it's gone through this process. So let me first start with, and so you know, my background is, as Angela introduced, I'm an American. I've lived in China now for 16 years. I've seen it go through previous crises like the global financial crisis, and it does things sometimes in ways that are hard to emulate, but there are lessons to be learned. First of all, the thing that I think we all kind of know, the numbers and how they're playing out. you'll see the China number go up first because this is where the outbreak began. And then you can see the flattening of that curve that happened. And you'll see that not shown here with other Asian markets, whether it's Taiwan or Hong Kong or Singapore or Korea. Most of the Asian markets peaked early because the outbreak began in Asia, but they flattened. The European and American context, the curves that you see on the right, occurred later and did not flatten. So we didn't have the same trajectories that we're seeing play out in the Asian markets. Why? And I've tried to summarize that on the right. In Asia, widely available, free testing, tracing and isolation, strict quarantines, and the governments, for the most part, maybe not in all places and at all times, once the virus was known, it became a process of government accountability to be communicating regularly with the population. And there's a behavioral difference in Asia of people do don the mask when they are being courteous to everyone else to prevent the transmission of a potential contagion. In the West, we've seen the difference. Wait and see approach, don't panic the markets, tracing not necessarily easily available, nor the testing, very gradual implementation of quarantine, and no or late adoption of mask wearing. It's only now becoming necessary for the average citizen to wear a mask. Was viewed more as a healthcare worker's instrument, but now I think behaviors are beginning to change. The COVID-19 spread in China happened around the Chinese New Year. It was like the worst possible time you can imagine. Why? Because the largest migration of human beings on the planet occurs at the Chinese New Year. The outbreak began in Wuhan, the one in dark red at the center of China, and emanated to all provinces within just a few weeks as people went back to their home villages and the virus began to spread. Now, it's called COVID-19 because it was in December when it was first identified. And it was Wuhan province where an epidemiological survey was begun towards the end of December. And obviously there's been a lot of reporting about when did they actually know it? Was it earlier? Could they have done things earlier to contain it? Of course, I think, we could probably put a lot of study to that question, but that's not the point of today's discussion. It was identified in December. It became understood that it was person-to-person communicatable in January. And what happened after that happened very rapidly. The government began to put insurances in place that expenses for confirmed cases would be covered. They mandated mask wearing in the province of origination. A lockdown began by January 23rd. I actually left China to go for Chinese New Year to Taiwan on the 25th of January. On that day, China, the days prior to that day, China began to erect emergency makeshift hospitals in Wuhan. They built these emergency field hospitals within the span of just a few weeks' time. They invoked resources like the Army, medical forces, medical teams from all over the country converged on Wuhan. And by the 25th, the entire country, all 30 provinces, had invoked a level 1 emergency response and shut down all non-essential facilities and businesses. An entire province, the equivalent population of the state of California, was locked down, Wuhan, by the end of January. And all parts of China were basically put into a containment mode by the end of January. There were 2 hospitals built in that time frame. Test kits were being deployed in the hundreds of, almost millions of units by early February. Negative pressure wards in the hospitals, which prevent the contagion from spreading beyond the affected person. Basically, the mobilization and centralization of the response was very clearly evident in early February. And the central government was providing the backstop for the cost, buying the excessive medical supplies, and assuring that cost wouldn't be borne by the individual provinces or the hospitals. So the government was actually stepping in to provide the the safety net, if you will, to make sure the necessary PPE was in place. Test kits were being produced in the millions by the end of February. Face masks were generally available. Obviously, a lot of things happened in the span of just 1 month's time, from the end of January to the end of February, where all of these capacities were being mobilized. And travel restrictions were beginning to emanate not only from between places in China, but between China and the rest of the world. I was affected by that. I was in Taiwan at the time. Taiwan did not have a major spike. I think even till to date, their number of cases is under 450, with only 6 deaths. Because why? They put in place containment measures very early in January, and they had learned from the SARS pandemic how to prevent the virus from entering the country. And they're only less than 100 miles away from mainland China. What happened in China during that time was the cities were emptied. I think you're all kind of experiencing parts of this now. In Hubei province, which is where Wuhan is, there was a complete lockdown. All transportation services, buses, railways, flights, ferries, all of it was suspended. People were required to shelter at home. All non-essential companies were closed, including manufacturing. That had a major impact on a big manufacturing hub for the automotive industry. We'll talk a little bit more about that later. Basically, Wuhan became a very dormant state. A city of 11 million people was frozen. It was unimaginable at the time. A city of 11 million, almost the size, I heard it then, the size of London. A province of China the size of California in population. How is it possible that you can lock it all down? They did it. In the rest of China, not as strict, but they were not as locked down. There were some cities like Wenzhou and partial shutdowns in Hangzhou and Shenzhen, but not as much containment in the February timeframe for the rest of China, but very strict. But you can see how the place emptied out with the pictures on the left. The makeshift hospitals, enormous resources were pooled to contain the virus. A lot of you could see the amount of money, the amount of cost that was absorbed in this time frame, and basically putting in place the capacity. And now, frankly, it's all being dismantled. What you see on the left here are photographs of the empty hospital now that the case loads have declined, and they've declined significantly. So if you look at the cases that have been newly confirmed in China, you can see the numbers. There was a peak in the middle of April timeframe. Actually, these were people that were coming back. These are imported. That's why the dark blue are imported cases. The number of new cases identified in China was basically almost eliminated in terms of confirmed cases. Confirmed cases where people actually have exhibited symptoms of the disease. There was a little bit of a peak in mid-April. These were Chinese people that were returning from Europe, and they brought the virus back with them. But they've flattened that development even today. You can see the number of new cases now below 20 in the entire country. Again, most of them imported from abroad. These are people trying to get back. On the right, you can see the ongoing problem. The problem is the asymptomatic transmission. This virus, unlike others that we've seen before, can be transmitted by people who do not exhibit symptoms of the disease. What's lingering in the population within China are the asymptomatic cases. The imported cases are going to zero. Why? Because you can't get back into China now. They're not allowing people to get back in. I actually came back on March the 27th. March the 27th was the last day that people holding visas, active visas in China, were allowed back in the country. And I had to go through a 2-week period of being quarantined, even though I tested negative. I didn't pay for the test even, but I tested negative and I had to go through a 2-week quarantine period with myself and my family, thankfully inside of my home. Now, if you come back, if you're even allowed in, you have to go into a government-run facility for quarantine for a 2-week period. So draconic measures to contain the virus. So one of the things that I want to conclude out of this section, massive mobilization of resources, the acceptance in China of you will be tracked, right? You will be monitored. I will talk a little bit more about how people are monitored later, and big data analytics on movement, on mobility. Mobility is what allowed the virus to spread as quickly as it did. Stopping mobility, containing people movement has been the way to contain the virus. Obviously, if you're in the business of servicing cars, that's not good for you, because if people move around less, they don't use their cars as much, they don't need as much service. We'll talk a little bit more about that from an industry standpoint a bit later. So let's move to the impact on the industry. But before we do that, because what this virus has laid bare is structural weaknesses, not just in the automotive industry, but in all sectors of our society, in our healthcare system, in our political systems even. There are structural weaknesses that have been laid bare. So let's talk about that from an economic standpoint first. The first thing that I want to kind of share with you is this is a very unique event. And we've all lived through some form of shock at some point in our lives, right? We've experienced the global financial crisis. That was a recessionary period. That's a demand shock. Then we've experienced supply shocks. We've seen earthquakes. We've seen tsunamis. We've seen events that have caused production to go down. This is the first time where both things happened at the same time that I can recall. It's a perfect storm event, and it impacted both supply and demand. We saw massive lockdowns which suppressed consumption. We saw investments reduced to basically say we're not going to be able to produce, and therefore we can't continue to maintain the purchases of supplies to our manufacturing facilities. For the first time in recorded history in China, PMI index fell to 35.7. It's the lowest since 2004. That's when they actually started measuring it. Temporary unemployment, surging inflation, all kind of unprecedented events, certainly in China. And in China, small and medium enterprises hit particularly hard. And SMEs in China contribute more than 60% to the GDP and employ about 80% of the workforce. And they don't have deep pockets, right? So they don't have the financial reserves to last very long through a crisis, which all created urgency for China to get things under control very quickly. But when you look at the systemic-wide problems, all of these were needed to be navigated in order to get through the worst part of this. But across the board, tourism, retail, entertainment, logistics, all of it was hit. So it was a supply and demand shock occurring at the same time. Now, how does that play out in terms of China's GDP numbers, and what does it mean for economic activity? Well, let's first look at the previous history. We've never seen, certainly in the time I've been in China since 2004, a negative GDP. We saw that for the first time in the first quarter of 2020. Negative 6.8%. The economic activity, year-over-year growth, you can see fell off a cliff in the first quarter of this year. We start to see now in the March timeframe a rebound on industrial production. So the supply side of this is coming back. The demand side, however, has got a much longer period of time to crawl back. So I think important to note that while we may contain the virus and we may be able to get our production system back, the economic activity is going to lag that. Why? Because it has an impact on employment levels, has an impact on the willingness of consumers to continue to spend money. So you can see retail sales down, industrial production down, fixed asset investments down. This has been a big hit to China's economy and really an unprecedented hit in the modern era of China's economic development. What does it mean to GDP? Obviously, it's not good. GDP ranges, forecasts are anywhere from the low of 1.3% predicted by Barclays and Nomura, anywhere up to as high as 3%, which is what you'll see from Goldman Sachs, all down from where the previous estimates may have been. China's investment, CICC, their most prestigious investment bank, puts it at 2.6%. So overall, you're going to see a significant reduction in growth in terms of China's economic development, but the fact that it can even be positive in the face of what we're seeing globally, I think, is also noteworthy. So as we now turn to the automotive sector, how is it affecting the automotive industry? Well, before 2020, there was already, the headwinds were already there, right? We saw the first contraction in industry volumes in 2018. So the peak year for automotive in China was already in 2017. We saw contractions in the last 2 years. We saw a big one last year of 8.2% negative year-over-year growth. And this year, the question I think the forecasters are all trying to anticipate is how much of a hit are we likely to see on the overall year? We know we've seen a big hit in the first quarter, but I think it's important to go beyond, nobody's forecast is going to be perfect. Everybody's estimating anywhere from, in the case of an industry group, Continental, somewhere in the 5 to 10% down range. China Passenger Car Association, 8% decrease. CAM is 5%. They're a bit more optimistic than the others. CICC, which we just talked about, 12.5%. S&P at 5%, and Moody's at 10%. So the forecasters are all in the 5 to 15% range, 5 to 12.5% range of a year-on-year decline, which is this range bound here. But there's an interesting factor here that I think we should all take note of. The industry, if you look at it not in year-over-year numbers, but in week-to-week numbers, we saw the absolute crash during the early part of February. Now, that was also coincident with the Chinese New Year, so a lot of people are just not here to buy anyway. But the fact that the pandemic was happening really took the market almost to nothing. This is average daily sales numbers that you see plotted here on a week-to-week basis. 8 consecutive weeks of narrowing of the losses. And if we take this into April, I'll just tell you what last week's number was, the second week of April. It was plus 14%, an increase of sales in the second week of April versus the same period last year. That's, to me, quite telling. This industry is, in China, recovering. The daily sales on a weekly basis is improving. The gap is narrowed, and in the first evidence of a turnaround, in the last week of recorded data, we've seen a year-over-year growth from last year to this year in daily average sales. So that's, I think, an indication that the worst is behind us, but that's not good news yet. We're still going to see a negative year overall, but it does indicate that people are coming back. In fact, one of the things that could happen here, and it might be one of the reasons why we're seeing a bounce, is you do have a little bit of pent-up demand. You have people who might have been considering buying a car, but they're coming back now, even probably more convicted to buy the car. Why? Because public transportation may be at risk, and maybe even some of the shared mobility. The exposure to somebody else's space is a risk for virus being spread. So shared mobility, which was very popular in China, might actually take a hit. Certainly has reduced the demand for mobility, but people may want to have their own space back, which I think could be a good thing as a tailwind for continued industry expansion. But let me point to a structural problem. This industry has too much capacity. This is pre-COVID, pre-2020. We had 53.7% capacity utilization in China. Some of the OEMs have more overcapacity than others. Japan, you could see, is underutilized. China, was overcapacity. In other words, they needed to run additional shifts. China, woefully, the Chinese manufacturers, these are manufacturers in China, woefully overcapacitized. So this structural problem pre-existed COVID-19. You add the COVID-19 decline to the mix, and you have a significant problem in China of oversupplying the market. So the auto industry is ripe for contraction. So structurally, this industry post-COVID will probably need to go through some consolidation. We saw a first flight this past week where Renault made an announcement that they're going to be terminating their participation in the combustion engine powered vehicle production in China. I think that's the tip of the iceberg. I think there will be more structural realignment and consolidation going forward. Okay, now let's turn the attention to the supply chain. I've pointed to the rebound, early evidence of rebound in the auto industry, but continued year-over-year decline is expected with structural realignment in the last section. Let's talk about, now, why is it even possible for us to talk about a rebound? It's because China did a good job of limiting the damage to its own automotive industry and economy by responding quickly and containing the virus. The story in chapter 1. Chapter 2 points to the possibility of a turnaround on the automotive industry, but still points to structural issues. Now let's talk about chapter 3, which is the global supply chain. First and foremost, let's talk about the supply side. On the supply side in China, work is resuming. Employees are coming back to the place. And you can see the quote from the Minister of MIIT, the Vice Minister: capacity utilization rate of the automotive industry nationwide has reached the same level as that of the same period of last year. So the industry, in terms of its ability to manufacture, is back. The problem isn't on the supply side. The problem is probably going to be on the demand side. And if you look to Wuhan, which was the epicenter of the virus, all tier 1 suppliers in Wuhan have obtained work resumption approvals. 95% work resumption rate, largely relieving the supply chain risk that resulted from factory shutdowns. And key global auto suppliers like Bosch, Schaeffler, ZF, Faurecia, Valeo, Webasto, all of these companies have significant operations in Wuhan. So if Wuhan is back up, then you can assume the rest of China is also back up. The problem, though, isn't just on the supply side, as I pointed to earlier. The problem now, by the way, is not just a supply chain risk for China. I think China's supply chain risk is getting resolved. The problem is the global supply chain now. Now the pandemic is affecting auto factories around the world. This is just a list of some of the closures that we've already seen from both OEMs and suppliers. As the OEMs take down their factories, obviously the supply chain also is affected by that as well. Demand goes to zero, the ability to produce goes down. So this has evolved, right? If we were talking about this a month or two ago, it was will China's supply chain risk our ability to get parts? Now the problem is a global problem. And again, we see that demand may be prolonged if people are not able to get back to work. It's not just an issue of can you produce the cars, but will there be a market for them even if you could make them? So if we look again around the world, in Europe, EU-wide production losses may total 1.6 million as of April 5th. The job losses as the factories are shut down, they're expecting an 18-day work stoppage in Europe. In the US, we're talking about a 3-week period of reduced vehicle production that adds up to about 900,000 units of lost volume. But this is the schedule of what we've seen so far in terms of the resumption of work. Obviously, then you've also got the falling consumer confidence. You've got 95% of Americans under stay-at-home or shelter-in-place orders. The dealerships, even if they're open, who's going to be buying? With more than 15 million Americans filing for unemployment, I think that number is over 20 million now. And everybody's kind of going to be preserving their capital, as the industry is. So are the individuals who are shopping for vehicles. Aftermarket demand, obviously, people not moving around as much. You don't have as much demand for mobility when people are sheltering at home. In China, that manifested itself. You can see it in the numbers. 79% of automotive aftermarket suppliers reported a decline in aftermarket sales, driving the average sales change down 28%. They were expecting 8% year-over-year growth. We're now looking at so far 28% down. So lower miles driven means lower utilization of car. Car owners don't have as much maintenance. Obviously, there's fear over bringing your car to the maintenance shop for risk of contamination. Obviously, there's also a reverse supply issue that many of the cars people drive here need parts coming from outside of China, from Italy, France, wherever the supply chain is coming from, and those supply chains are now disrupted. Obviously, in Europe, same story or similar stories. Workshop open rates. People are still, even though they're not moving around as much, so there is some demand. Some of the shops are still open, but significantly down in the period that we're showing you here. And it's not just about getting parts made and getting them to the shop or getting a demand issue. There's also the issue of logistics. The airlines are not running as many flights. A lot of the air freight was occurring on passenger planes. Fewer passenger flights means less air freight capacity. Prices have gone up. So if you're practicing a multi-stage supply chain that includes air freight, your cost structure has gone up significantly. And similarly, sea shipment is not as disrupted, but obviously is their manpower even to unload the ships when they arrive. So for many of the multinationals who are working in the supply chain, lean production and global multi-stage supply networks are under some pressure. Suppliers, you can see here Continental on the left, significant shortage of their production, work stoppages. Their outlook for 2020 has been withdrawn for this year. On the right, you can see the Chinese companies, Chinese suppliers already struggling to mitigate the U.S. tariff. I mean, that was already a burden that was placed on the Chinese supply chain. Now add to that the lower demand from the rest of the world as they cope with the after effects of the viral outbreak. It points to a structural problem that we now have in the industry, right? Not only can we make the parts, but how many of them are we going to actually need if this is a prolonged recession or economic collapse around the world. There will probably be some mitigation of that. The Chinese suppliers, as their competitors shut down their factories around the world, some of the Chinese suppliers who've been able to get their production back might actually see some bump, at least short term, in demand as they replace the volumes lost in Mexico, in India, and other markets. I would kind of summarize on the supply side with this idea that what we saw in the early stage of the outbreak from January to February was a real challenge to the supply chain philosophy. Before this even happened, there was the trade war and the tariffs. So there was already headwinds blowing to the conventional wisdom of supply chain management, which said you should put everything in low-cost countries. And that low-cost country at scale was China. The US trade war and tariffs began to challenge that paradigm. Add to that the COVID-19 outbreak, which disrupted China first, and companies were forced to seek alternatives around the world, like India, Mexico, elsewhere, Southeast Asia. So the footprint of where the supply chain is located was challenged in phase one. Phase two is when the viral outbreak spread around the world. It became a global pandemic. Factories in other low-cost countries were closed, and the China supply chain starts to come back. That's where we're sitting today. But global demand is slowing down because of lockdowns, workshops getting closed, people moving around less frequently. So now we've got a problem where China's coming back up, but the demand is going down. The global supply chain is also affected. Right now, the factories around the world building parts are also disrupted by the inability to move parts, the inability to manufacture. So what's happening now is the pendulum, which was swinging away from China in January, February, is starting to come back to China to secure the capacity in China, which is necessary to backfill for the production that you're losing elsewhere. Now the question has to be going forward, post-COVID-19, what will be the configuration of global supply chains going forward? The governments around the world are going to try to push more manufacturing into the countries that they represent or the regions that they're in. And I think the global companies are going to need to respond to that, which means more reshoring, more regional sourcing. Obviously, with it, and tariffs might actually be used as a lever to force companies to do that if they're unwilling to do it voluntarily. But you have to really step back from all that politics and ask the question, where should the footprint of the global industry be to mitigate not just the cost, but the risk of disruption? So the reshoring to create regional supply chains may be a prudent mechanism to de-risk supply chain disruptions going forward. So developing supply chains around the world where costs can be managed and helping get supply chains up into markets might actually require a infrastructural investment, but it's going to come with a cost penalty, because if you're going to redistribute your supply chains, it's going to mean if you're going to have to invest in some additional tooling, additional factory capacity, and that's going to come with a cost penalty. The other opportunity might exist for actually working together with your Chinese suppliers to expand the footprint into other regional markets that de-risks the geographical issue associated with these types of disruptions. Okay, finally, and I don't want to talk through this topic without leaving you with some hope. Everything I've talked about has kind of been the problem, right? The implication of supply chain disruptions and how to kind of navigate through the worst of it, as China's been able to do, at least on their in their part of the world. What I do want to kind of give you is some indication of where we might end up in terms of how we evolve into a new normal. One of the outcomes, or one of the consequences of what's happened in the outbreak, is people have had to learn new habits, which a significant amount of that is how to live our lives through the online channels. I mean, we're doing it here a little bit with webinars, right? Instead of being able to meet in a conference room, we can do a webinar. The nice thing about that is you guys don't have to travel, and I can talk to people all over the world from where I sit in my office in my house in Shanghai. The ability to knit together the world leveraging online tools is happening, and the explosive growth of digital services that happened to this outbreak, I would argue we've learned new habits. We learned that we can get medical services, or we can consume goods in retail. We knew we had those tools before, but now they're exploding. And in China, that's certainly an outcome of the outbreak. Digital services utilization, you could see in virtually every category shown here, have increased, whether it's healthcare, education, online entertainment. Kids can't go to school. They still need to be taught their classes and complete their coursework. Large-scale digitalization is happening. You could see healthcare, surveillance, sanitation. A lot of the delivery of services involves mobility. 5G remote diagnosis, 5G traffic police robot, drones for disinfection and broadcasting, autonomous street sweepers. This is mobility in another use case. It's delivery of services. And we can see also the utilization of big data, the deployment of infrastructure around monitoring the health. In the case of the healthcare tracking, and Alibaba has actually provided an app. I use it every day. We're tracked in terms of our exposure to the virus. Rating green means we have no restriction, we can move about. Yellow means we need to be quarantined for 7 days. Red means we need to be quarantined for 2 weeks. And how do they monitor you? Based on your mobility, based on your movements. If you've been exposed to the virus through other interactions that you've met and encountered, your QR code can switch from green to yellow to red. And there have been other cities, other places in China using different apps to leverage big data around mobility to determine whether we have any health risks. We see mobile delivery of services. These are robotic solutions. It's mobility, right? It's goods movement. It's delivery of services. we see a boom in the commercialization of autonomous technology, mass commercialization of autonomous last mile delivery, as well as logistics for moving goods to the people that are ordering them. One of the implications of this has to be for an automotive industry to pivot from focusing purely on moving people to moving things. And these companies that you see on the right are some of the leading examples of Chinese companies that are making the technology available for pivoting into this goods movement commercial boom that's happening. They're actually benefiting from the sheltering at home and the fact that people are moving less. China during crises tends to invest, and they've identified 7 areas. These are the new infrastructure policy that was actually implemented in 2018. What we saw post-COVID is a really doubling down on this. The central government urging more investment into the 7 key domains and appropriating significant amounts of investment to invest in infrastructure during as a stimulus package as a way of pulling through the pandemic. So I conclude here, the pandemic has accelerated China's path to the future digital economy. And what does that mean? That means the 7 areas: 5G, AI, big data centers, industrial IoT, intercity rail and high-speed rail, and the energy network for ultra-high voltage for charging and for NEV charging infrastructure. You could expect China, they're doing it. They're appropriating money to invest into the next generation of technology to power mobility. So let me conclude here, and I'm going to leave some time for Q&A. China is showing the early signs of automotive market new car sales recovery after the market crash in early February. Daily sales averages are increased. Over the past 8 weeks, we saw a positive week in April already. The crash has already triggered the start of a long overdue industry restructuring. So I think structural change will come from this. Second, aftermarket services globally and in China have experienced a perfect storm of both demand and supply shocks. And supply chains in China are gradually being restored. Third, the conventional wisdom of LCC low-cost country sourcing needs to be challenged, as its weakness has been laid bare by the twin shocks of the trade war and the pandemic. Cost optimization and risk management will add pressure to distribute the global supply footprint. So where you place your supply chain and where you source to, we need to risk manage that better than we have. Low-cost country isn't the paradigm going forward only. There are stark differences between the West and China in how they're responding to the crisis. In the West, the market drives the economy. Government typically backs the traditional, already established industries. China, more likely to seize the crisis and invest to create a new set of competitive tools. And we've seen that in the 7 areas of investment that I highlighted. In our view, the technology-enabled transformation of the industry business model will accelerate in China, which will seek an opportunity to gain a competitive advantage during the crisis. I saw it happen in the 2008-2009 timeframe. China built out its high-speed train network, invested over $500 billion in building out infrastructure. They'll do it again to try to, create the future, not reinforce the past. And finally, the leaders in this industry will need to pivot and deploy their capital toward growth opportunities resulting from this shift in the consumption pattern toward digital services, which leverage these new mobility platforms that I talked about in the last chapter. I'll leave you with this. I would like to open it up for questions. I would also ask you to submit your thoughts. Webinar 2 and 3 are flexible. We'll address the questions that you have to the degree that we can in the next webinar, as well as the final one. So webinar 2 will be more focused on kind of emerging opportunities coming out of the crisis. Webinar 3 will point to some of the new structural changes that we'll likely see in the industry going forward. Let me pause there and leave it to you for any questions you might have.
Thank you, Bill. So let's go ahead and dive into our Q&A. As a reminder, if we do not get to your question, we will try to follow up by email after the webinar. So the first question comes regarding alternative supply chain, the phase 2 and phase 3 that you covered. How fast and realistic do you see the trend to shift the manufacturing base outside of China or reshoring manufacturing?
Yeah, I would say not. These things don't happen. You don't flip a switch and ship these things. I mean, the reshoring. Even if companies were starting to move in that direction, you generally don't tool up in multiple locations. But I think that going forward will probably need to be baked into the business plans for automotive companies and automotive aftermarket companies as well. It's having all your eggs in one basket is not appropriate, is not a strategy. Although many consulting firms probably pointed companies to do just that in the LCC era. I think we're probably migrating into a what I call a distributed supply chain, where you balance the cost penalty with a risk management philosophy that allows you to leverage a efficient distribution of assets to dual source to multiple locations. I think OEMs are going to be challenged with that, and I think aftermarket suppliers are challenged with that. And that's where I think the new sourcing paradigm post-COVID, this is where I think the industry needs to settle. It isn't put everything back in the home country. It's some intelligent distribution of sourcing that we need to arrive at, which manages the balance between cost increment, the incremental cost of adding additional production capacity with the mitigation of risk when you do have these types of supply chain disruptions.
Thank you, Bill. Next question, what do you think will be the impact on electric vehicles and China's plans to be the leading autonomous vehicles market by 2030?
Well, interesting. I would say, as I described in the last chapter, the counterintuitive conclusion here is it actually accelerates the path to commercialization of technology. Why? Because the main benefit, the main investor pools that are deploying money into the autonomous vehicle development and to the development of 5G infrastructure are the digital economy, right? If you can widen the bandwidth for delivery of service, and a lot of that involves 5G, technology, the infrastructure needed to do that. First of all, China, this is not all in the back of industry. This is, I think, one of the things that's not understood in the rest of the world as well as I understand it now from being here 16 years, is you don't put all of the burden of building the infrastructure, whether it's EV charging or 5G tech, on the back of the industry. You provide that as a infrastructure foundation for industries to build on. If the infrastructure's there, then you don't have to build that high speed, that supercharging network that Tesla had to build without a lot of backing, right? So I think the autonomous vehicle tech, which was commercializing slowly, primarily focused on people movement, will pivot to the goods movement opportunity, as I've illustrated here, and it will ride on the back of this infrastructure investment. I think the 2030 timeframe for self-driving vehicles will move to 2025, but most of those self-driving vehicles will not be moving pizzas. Will not be moving people. They'll be moving pizzas and packages and other goods that need to be delivered to the door, or from the warehouse to the distribution center, or from the dock to the warehouse. So I think the supply chain movement, or logistical movements, are going to be automated within China within the next 5 years. EV technology, that's a little bit more complicated. Why? Because you've got a retail part of that, right? You've got consumers that have to feel like EVs are something that are attractive enough for me to buy. And there haven't been a lot of companies that have been out there making an EV that was aspirational enough for people to want to buy it, until Tesla. And Tesla's now in China. Their business in China was booming in the last few weeks of this year as they start to phase in their local production. I think the EV development in China, don't expect it to go away. What we do expect is fewer companies. I do expect a consolidation. There are way too many, and there's not enough bread to feed all those mouths. So I think we'll see an EV OEM consolidation, but then a development of a healthier growth of that segment is my anticipation.
Great, thanks, Bill. Next question, two parts. First, what % capacity is China's auto parts production at today, and how much longer do you think they will attain somewhat of a normal threshold again? And part two, is there a particular product category you think will be in short supply?
Good questions. I think, as I would encourage everyone, give us your questions. I will, that one, I don't have a number, but I will definitely answer that question for you in one of our next webinars. Absolutely good question. It is going to be significantly underutilized, especially post COVID-19, because demand for the components is diminished. But we're probably going to see, as I alluded to earlier, a little bit of a mitigation for that, because China's production will come back faster, and Chinese suppliers will get a temporary demand increase when competitors are not able to produce. So it definitely went down. It was down, you know how the supply chain plans, right? The automotive industry says they're going to make this many units. They don't make that many. So the suppliers end up with excess capacity like the OEMs have. They probably are more flexible in what they can build, so their capacity utilization is going to be higher than what the industry at the OEM level is. And it went down because of COVID. I don't know the number, but it certainly went down. But I think they'll get a short-term bump when the other markets are unable to fulfill their orders. I don't think they're going to, they were already hit by the tariff, which was a definite headwind that reduced demand from China for certain components. So we'll come back to you with a little bit more detail on exactly what those numbers are. It's a great question. The other part of the question is what components are more impacted. I assume you mean by the COVID outbreak. I don't know if I can say that it was, China's a center for everything, right? Whether it's making tires or making electronics, it makes a lot of what the world needs in virtually every category, and a lot of it comes from Wuhan, right? The part of the country that was the center of the outbreak. And whether it's a commodity part or a sophisticated component, you'll see multinationals in the mix here as well. So I don't think it's going to be disproportionate toward one particular type of commodity. I think it's going to be a uniform impact. But I think, again, we'll come back with a little bit more granularity on the answer to that question, if there's any particular segment hit harder than others.
Thanks, Bill. Next question, have you seen any auto or auto parts companies pivot significantly from their pre-COVID businesses into post-COVID opportunities?
Oh, yeah, absolutely. First of all, I think, a corporate social responsibility savvy company will immediately try to seize an opportunity. And I think Geely has done that by repurposing some of their vehicles into, first responder type fleets. You'll see that from a lot of the companies that build commercial vehicles, building, emergency response vehicles. Ford was able to do that with their Ford Transit van, which they built a quantity of for emergency response type of use cases. So if you're in the segments where you have a form factor that's relevant to some of the needs of the pandemic, then you are able to do that. Not everybody is, right? Not everybody is making a platform technology or vehicle type that fits the need. But I think those that did were able to pivot. But your question is a really a good one. Why? Because shouldn't we be able to do that? Right now, if we're people movement focused, which is what 95% of this industry is geared for, is selling through retail to consumers who own and operate their own car. Of course, that's the segment that we should serve. That's where we get our brand identity. That's where we get our brand equity. But if the market suddenly shifts, as it has, to other needs, like goods movement, like services, delivery vehicles, shouldn't your platform, shouldn't your manufacturing system be able to pivot to producing a vehicle with a top hat that serves a different use case? And I think that's a really good strategic question. That's the question that I want to get to in our third webinar. Our second one, as I outlined at the beginning, emerging opportunities in an accelerated period of disruption. How do we create a flexible enough product strategy to where we can pivot when the market shifts suddenly and rapidly? The industry is geared to a very traditional product that has a long development cycle that can't be reconfigured very rapidly. Our supply chains are the same. They tend to be scaled in one location, and when a pandemic happens, we can't quickly, reconfigure to respond to it. I think flexible supply chains, flexible production, Industry 4.0 technology that allows us to pivot more rapidly in a hardware-centric business. I think all of these are implications that I'd like to explore further as we go into the next second and third webinars.
Thank you, Bill. So it looks like we're at the top of the hour. We had a few questions we didn't get through, so we will follow up with you via email. Thank you again to Bill for that informative webinar on China's automotive industry and global supply chain. As a reminder, business resources for the auto care industry is being updated on our resource page, autocare.org/coronavirus. You will receive this slide deck handout as well as the recording after the webinar has concluded. Additionally, please don't forget to take our survey right after the webinar so that we can use your feedback for Bill's webinars to come and also any other content that you think will help your business navigate COVID-19. Thank you so much for attending. Thank you, Bill.